Hi, I'm Calvin Rose, and welcome to this special edition of Market Minute. Please like, subscribe, and hit that notification icon so you'll never miss one of our upcoming market reviews. We're doing this special edition today because the equity markets had a big up move today, but there's more to it than that. Let's take a look and see what happened. So you can see here from the market close numbers, all of the major indices had big up day moves. 2%, almost 3% for the NASDAQ, and almost 2% for the Dow Jones Industrial Average. You couple this with the fact that commodities were down, crude oil was down big, natural gas was down, gold was down, and then combine this with the fact that bonds, interest rates actually went up today. So people were moving away from what have typically been safe haven assets, government treasuries, gold, and then moving into equity. So that's all good, but there's more to the story than that. If you go back to the market minute from last Friday, we talked about the fact that equity risk was very high. And why is that? Well, if we look at this chart, and I explained these charts on that last video, so I'm not going to do it again here, but basically this orange line is selling pressure, and you can see that it's high and moving higher. Now it started to fall off today, and the gray line is buying pressure, and that has been falling. But you can see these two are not even close to crossing. The ideal situation you want is where the gray line is above the orange line. You can see that happen very briefly here, but didn't last for long. So we have been in a downward trend. This black line is the price of SPY, which represents the S&P 500. We've been in a downward price trend. You can see that the downward selling pressure has been well above the buying pressure for almost this entire period when we look at a 20-day chart. If we take a look at the 5-day chart, which tends to act a little faster, you can see we're still not there yet. These two lines haven't crossed. So while today was very encouraging, I don't think we're there yet. We're still going to need some more confirmation here. We may have seen the low, but until I see these two lines cross, I don't think we're totally out of the woods here. Rather than drag you through all the detail of those charts for gold and interest rates and cryptocurrencies, I'm just going to give you a brief overview here of how risk looked on Friday versus how it looks today. And if you're really a data nerd and you want to get into the charts, just keep watching past this section and I'll cover all that. So let's take a look here at what we're seeing today versus on Friday. So last week on Friday, equity risk was very high, justifiably so. And this week, it's still very high. And you can see from the charts that I talked about previously why this is the case. Gold risk last week was low, but I said that it was at somewhat of a risk. And today, a few days later, I've moved it to moderate risk. Now for interest rate risk, I said it was high risk last week because the orange and gray lines had crossed. The orange line was, the selling pressure was higher than the buying pressure. This week, I've moved it to very high. And we'll see how that plays out for the rest of the week. And then finally, for cryptocurrency risk, last week it was very high. And this week it remains very high, although I have to say cryptocurrencies have been moving sideways, so they've been holding up very well. Now let's get into the charts for those of you who are interested in the details. So now let's take a look at gold, which has been a safe haven. So if you remember on Friday, I said that I thought gold may have seen its best days, and it's turning out so far that looks correct, although again, this could certainly turn around and go the other way. So if we look at gold, you can see the price has dropped fairly dramatically here. You can see that the buying pressure is dropping here, and the selling pressure is starting to increase. And you'll see that as we look at different days here. All of them look that way. So you can see it on the sum, you can see it on the 20-day, you can see it on the 10-day, And you can certainly see it on the 5-day. And in fact, on the 5-day, it looks like these could cross as early as tomorrow, which would put gold at very high risk. And then let's take a look at interest rates. So for interest rates, I like to use the TLT, which is the long bond 20-year treasury. This was just crossing on Friday. You can see here that the selling pressure has continued increasing from Friday. It's now well above the buying pressure line. So these have gotten even more risky. Now these haven't crossed here in the 20-day, but they've crossed in the 10-day and the 5-day. In fact, they've crossed big time in the 5-day. So to me, it still looks like interest rates could continue to rise, which will cause the price of TLT to decline further. Now, finally, let's look at cryptocurrencies, which I think have held up amazingly well given the way these charts look. So we're looking at the sum chart currently. This was moving up back here on Friday. It's continued. The selling pressure has continued to stay fairly high, while the buying pressure has actually declined. So to me, this is still very high risk. Although if you look at the price action, it bottomed out back here, came back and tested that bottom here, and it's basically been moving kind of sideways. So not sure where this is going to go, but not ready to totally jump 100% back into cryptocurrencies yet. Well, that's a quick market minute update. Didn't want to make this a long video, just wanted to kind of give you a midweek update based on the big moves we saw today in the market. Don't think we're out of the woods yet, but we'll know over the next couple of days. It's got to go one way or the other. I'm Calvin Rose, and thank you for watching today. If you like this video, please hit the like, subscribe, and notification buttons so you won't miss another market minute update. That's all for now.